Hello everyone, welcome to our new webinar. It's Monday, June 30th, so actually the last day of the month and the quarter as well. So hope everyone had a wonderful weekend. I was hiking with my friends. It's been very hot here for the last few weeks, and it looks like in the next few days it will still remain hot. So I hope weather will get a bit better in the next few weeks. So if we, okay, so NS is here. Let me check the chat box. NS is here. We have someone from Zimbabwe as well. If anyone else is around here and seeing this in chat box, please let me know. I can see that Khalifa is here as well. So basically we have some very good big news today. As you know, over the last few months in each webinar, I've been also covering not only the FX, but I've been also covering a lot of the US single stocks. And a lot of requests were received through our social media, through our channels. So I was always thinking how we can deliver this kind of a report. And basically we have decided to give the stock market analysis absolutely free that will be accessible through our website. So it's some kind of a beta version. So if you want to see the updates, I don't know, on Tesla, Apple, Amazon, these big names from the US, make sure to visit our website wavetraders.com, and once you will register, just follow the steps here, which will basically take you to the free access. So it's absolutely free. You will be able to download this report. Basically, you can see that the first report is already being uploaded this weekend. Okay, so you can see the charts that I'm following, the markets that I'm tracking. It's quite a big, I don't know, 30 instruments on that list that I will be covering. It really depends how the price action will unfold, but I will try to keep a regular eye on those markets, and will update these reports a few times per month. And as I said, it's absolutely free, no obligations, nothing. You just register and you will get this free access. I'm not sure how long this beta version will be here. Maybe I will remove it if there will be not a lot of interest, but definitely that I will try to do my best. Okay, so once again, make sure to visit us at wavetraders.com, and then just register and look for the stocks beta free access. Okay, now as you know, we are, as I said, in the last, I believe it's last, right? It's last trading day of the month. So trading could be quite interesting this week. Keep in mind that we are going into the summer months. Also keep in mind that stocks have seen a pretty nice move to the upside. So there could be some profit taking going on. Also we have 4th of July, meaning that US markets will be closed, and that's why we have, I believe, as my team member said, that we have non-farm payrolls reports on Thursday, not on Friday. Okay, so it could be quite an interesting week, but if you will see some sharp price action, maybe today on the FX or even stocks, maybe tomorrow, keep in mind that this can then be reversed when there will be new position adjustments through the week, or maybe we'll have to wait on something more significant next week, because that's because maybe someone will want to stay aside from the markets, booking the profits now, going into the end of the quarter. Then you have 4th of July, and also maybe someone will want to have come summer months rather than some volatile portfolio, and also you have the non-farm payrolls report that maybe someone will want to avoid. So that's why we could see some profit taking on stocks, as said, and this could result into some different flows in the next few days. Also, what's driving these markets to the upside? As you know, stocks have seen mostly move higher based on this positive news coming from the US-China trade deal, and also we have some US Canada trade talks as well starting this week. So of course this positive sentiment is the reason why the stocks are moving to the upside. At the same time, what we see here is that the US yields are interestingly coming to the downside, but we know that Powell somehow is still on hold, and most likely they will not give us any clue what they may want to do maybe in the next 2-3 months. But when looking at the US yields chart, I mean, here the price action, to me it looks like more and more that we really could be in a triangle. But as I said last time, even with this bullish interpretation where the US yields still could find a base and maybe start moving to the upside, here I said that we are missing this wave E, and this lower US yields at the moment is also the reason why the US dollar is coming to the downside as well there. So we'll see what will happen here in the next few weeks. I really do not expect any kind of a real breakout. I can see that there are no, wait a second, okay, so I can see that there is still ongoing sideways price action. So as I said, we are here trapped in a triangle, and I think that this triangle could basically come to an end maybe in the next few weeks, few months, but really I'm not seeing any kind of a breakout just yet. As I said, Powell is not delivering any kind of a views for potential cuts or even hiking rates, and that's why I think that this consolidation could last. But when this consolidation will be finished, that's when maybe dollar trend will also turn around. Okay, so looking at the dollar index here, and what is really important is that we are basically trading at the lower side of this channel. Okay, so it's a very important do-die zone. I'm not sure what will happen down here, as you can see here, and compare this price action from 2002 2003. Back then we have seen a very strong break to the downside. I'm not sure if that will be the case, but definitely what I think it's happening is that we are trying to complete these 5 waves down. It's still not the real final stages of this 5th wave. We are missing a few sub waves, but definitely that's something that that can keep this downtrend in play for the next maybe a few more weeks. But you can already see that we have some overlapping price action here. So in my opinion, even if we see some kind of rally and then another sell-off, you should be very careful down here. Basically we are approaching some very important C2A targets from the higher time frames. Also, what I would keep an eye is on the euro dollar up here. As you know, I can see that euro dollar is also in its 5th wave. We also have some divergence here. So again, if stocks will see some retracement, maybe even these currencies will also see some pullbacks. And as I said last time, I think that commodity currencies could do very well. Commodity currencies maybe could outperform this, such as against euro, pound, maybe even Japanese yen. But once we'll see maybe 118, 119, I think that that's a pretty big important resistance up there. You can see that this middle line of this impulse channel, and then you have the upper line much higher, basically even above 1.2 level. Also, maybe keep an eye on the COT data. You can see that the euro here is still a lot of large speculators obviously are along the euro, but as soon as we start moving into these extremes that we have seen here back in 2023, 2020, 2018, that's when you should be very careful, because as you know, if sentiment is going into some extremes, it will most likely turn around, and this has been the case, but in the opposite direction, as you know, at the start of this year, late in 2024. Now If we take a look maybe also on Aussie, as I said already last time, we are most likely just consolidating and looking for a support to be seen around 6,340. We stabilized what, 20-30 pips above that level. Very strong support level here. If you look back, a lot of swing highs here, and now that was a swing low. So what's the most important at the moment is that this looks like an impulse. So if we see some consolidation in the near term, some deeper pullback, watch for the support around 0.6480. I think that's a pretty interesting level, especially if maybe at the start of the week we see some kind of a weakness. Then I would assume that at the start of a new month we could basically reverse this price action, and ideally we will start seeing much higher prices. Also, as mentioned, that commodity currencies could maybe outperform the other currencies such as euro. And if we take a look here, firstly on a higher time frame scale, as I said, those kind of crosses, euro Aussie, pound Aussie, euro against New Zealand dollar, this will always somehow try to move in these cycles, because central banks obviously are always somehow working together. So I still think that here we are at the upper side of this very big cycle that is now coming to an end, and we could see a reversal in the opposite direction. And if you look at the Elliott wave cycles here, we basically might have seen a move out of a triangle and now trying to form a top here. And I like how this price action is looking and moving quite slowly into this 61.8% retracement. We are at the upper side of this potential corrective channel. So it's a very important big level from where we could see a reversal back to the downside. Even on a smaller time frame, we are tracking two ideas. Could be a WXY into this channel, but I also like, maybe even prefer this wave count more, where I see an ABC movement with potential ending diagonal here still unfolding. And the reason why I like this idea is because that was quite an interesting spike here in April 21st. So maybe there are a lot of stops, and I would love to see into that area maybe some spike and then a reversal. So would not surprise me this kind of a reversal, because ending diagonal wedge patterns, we know how this works. Normally they will be very slow, still moving in this direction of a trend, but then when no one will expect, you will see a very strong reversal to the downside. So 118 is a very nice resistance. Now if you want to be a little bit more precise here and look at some levels of invalidation, keep in mind that wave 3 should never be the shortest when comparing the legs that moves in the same direction, meaning comparing to wave 5 and wave 1. And since wave 1 was longer than wave 3, then obviously wave 3 here, okay, should not be the shortest compared to wave 5. So invalidation level is here above 1.82 level. Okay, so as long as we are below that level, I think that this count really has a very good chance that basically will prove to correct, or at least that we'll see some kind of a sell-off, even if temporary. I just think that this could be a pretty strong resistance up here. Also looking at Kiwi, Kiwi here has made a very nice, beautiful retest of these important support levels that we already discussed before, and so far we can see a very nice reversal higher, and these candlesticks they actually suggest that we could continue much higher and that we are bottoming here. Even if we still didn't manage to break through the resistance, I just think that if we see some kind of a pullback, could be even part of a triangle, but eventually we, I think, are headed even higher here on this commodity currency as well. Looking at dollar yen, if you recall last week, we said that important resistance is around 148, the 78.6%, and that invalidation level is here back from May 12. We didn't see any kind of a push above that level. We are basically seeing a very nice bearish pattern now, which in my opinion will take us could take us even lower. So I think that this corrective channel could be taken out here on the downside. Maybe firstly could be retested as a support, then you see some kind of a bounce, and then watch out for more weakness, but don't get too excited. We have some very strong supports down here around 141. It's the lower side of a very big triangle, which I don't think it's nearing completion. We are just moving here to the downside into wave D, just one subwave within a higher degree bearish triangle. But still, in the short term, I think that these levels could be seen, especially now, as I said earlier, that we have the US yields that are turning slightly lower, and this is one of the main reasons why also dollar yen is moving lower as well. Now, if we take a look on the euro pound, okay, so the euro pound here is basically trying to complete this bear cycle. Okay, we are seeing a very nice bullish reversal, even breaking this downward channel. So to me it looks like that we are in a new phase here, and there is plenty of room for this recovery to resume, even from a basic technical perspective. I mean, if you ignore the wave counts for a bit, you can see that we bottomed at the lower side of this range, very big range that is in play since 2016, 2015. So we could start moving towards the upper side of the range. So you can see that there's still plenty of room for this recovery. More importantly, we are breaking out of this downward channel, and if you look maybe even on a smaller time frame, from that latest, after that latest very deep retracement, notice what we have here on a 4-hour time frame. Very nice, beautiful, clean 5 waves up. So in my opinion, after current pose, we are expecting more gains, and I will be looking for these gains as long we are trading above 0.8355 in validation level. Keep in mind that that's also the former small wave 4 support here as well in that area, and there you have even lower supports around the 61.8%. So this whole zone, in my opinion, it's very interesting, very important for potential bounce. I would not be chasing the markets up here, but if we start moving into that area, I just think that this could be a pretty nice, interesting area for a potential rebound. Once again, as I said earlier, maybe if someone who just joined us, we launched the stocks beta version. Okay, so it's completely free access. You just go to our plans, you just register, click on the stocks. It's a completely free access, and we already have this first report available to download, so you can check all of the markets that are described here, which you can find in that report. So if you're interested in the US single stocks, make sure to check them on our website, wavetraders.com, because as you know, I was looking at these markets occasionally in our webinars, so I will not be covering them today. So if you are interested, make sure to visit us at wavetraders.com and follow the steps to get the report. Now let's take a look also on the S&P 500. So the S&P 500 stocks, as I said earlier, are making some very nice push to the upside, but as I said, because of the end of the month flows, we could see maybe some profit taking. Also 4th of July, US holidays, you could see some reversals happening. Now from an Elliott wave perspective, this also maybe would not be a surprise, because you are seeing in prices in a wave 5 of an extended wave 3. But if you look maybe at this Elliott wave channel, okay, so you connect the dots of wave 2 and wave 4 and put a parallel trend line at the top of a wave 3. So the real resistance could be around 6,300. Then sometimes you will also see that wave 5 will move towards the parallel line that you connect and put it on the top of a wave 1. In such case, you see levels around 6,500. So there's still plenty of room for more gains. Of course, moves can always extend further, but if you want to look at some opportunities, you should either wait on this wave 4 pullback, which in my opinion could unfold through summer. Also, if you look maybe at the seasonals here, you can see that July, August could be some slow month. So if we start seeing even further gains here going into the start of a new month, maybe because of who knows, next week we will get some more information, or maybe already this week, about positive outcome from potential trade deals, then of course this could keep this market alive. But if you want to participate and look for some opportunities, you still want to wait on some kind of a retracement, even if just short term. Now, if you also take a look on German DAX, basically last week we were seeing with our members that market has made a very nice deep retracement into very beautiful wave 4 support levels, and we are coming very nicely higher so far. So in my opinion, new highs are coming. Still there is a very big round figure around 25,000, but I would not be looking for any kind of opportunities here. If we are watching maybe some shorter term swings, the first support would be around 23,800, and then maybe even more important one, if we see suddenly more weakness, would be around 23,450. Okay, it was also some gap from last week, from Monday when the markets opened. Okay, so if we see some retracement here, I think this could be quite beautiful, very nice and strong support. Also, if we go further, crude oil. As you know, crude oil, in my opinion, since market was pretty volatile. Okay, if you just look at these cycles, it was very volatile. Firstly, broke to the downside, out of triangle, and now then recovering, and now again coming back from that recent highs for around 20%. So this kind of a price action, okay, always when you see, not always, but usually when you see market moving some very sharp moves in both directions, okay, then at some point the next phase will be consolidation. So in my opinion, I still think that we are in this wave B recovery. It really depends what kind of a structure will form. We'll see more upside into that very strong resistance around 90, maybe even 100, which in my opinion is a very key resistance levels for maybe second half of this year, if we really see some more volatile price action move into that area. So I don't think that we will get any kind of a clear direction here on crude oil in the upcoming months, because obviously if we are in consolidation, then this one could take time to unfold. But if you look at the smaller time frame, I think that here we have some very nice telling bearish price action, at least for the short term. So we are reversing impulsively down from that highs, and I think that even if we'll stay trapped in a high degree range, there is a chance that we will see the 78.6%. Notice how this very nicely comes at this area from May 30. Okay, it was very strong support down here, tested a few times. So I think this could be a very nice magnet, and if you see some kind of a rebound here, watch out for potential resistance up here. We broke this support quite aggressively, so if you see some rally, I think this could be very nice resistance right around $70 on a retest, and then I would be looking for further sell-off. As I said, the most important is that this looks like an impulse on smaller time frame, and as always we share the intraday, meaning that smaller times than 4 hour we also share with our members on our website wavetraders.com. Now gold. So I know that a lot of you is following gold, a lot of requests I'm receiving about gold. The most important thing is that gold is basically in uptrend, no doubt. The second most important thing is that you have in this leg down in the first part from April highs, that was only a free wave movement. Okay, so I think that this is a correction, and that at some point we should take these highs out from April. Okay, but what I see right now, what is happening is that basically we are in some kind of a fourth wave. Consolidation is getting a bit more complex. Longer could be a triangle. Okay, and I'm also have one possibility here that we are not in a blue degree, but maybe already in a black degree, especially if we consider that black wave 2 lasted here 109 days. So if we will see really this triangle and maybe going even into some longer summer consolidation, this is certainly possible that we will start approaching 100 days, and then this could be higher degree rather than a lower degree wave 4. What I really like so far on a 4-hour time frame, okay, is that we have some overlapping price action here from that latest highs. So firstly, with our members said last time that we have some very nice strong support around 3270 area. We stabilized down there, but I thought that that will be some kind of a diagonal that could be even part of a bullish flat correction, but that diagonal has been invalidated because wave 3 here in the middle was the shortest. But okay, these details are not important anymore. The important is that here looks like that wave C is still ongoing, because if we are really in a triangle here, then wave C should have some kind of a complex overlapping price action that should be structured by 7 swings, okay, if in a triangle, not in 5 waves. So I'm thinking that we are missing another push to the downside here. Also, what I like, if you go to the smaller time frame, we have some very nice support. You can see very important spike here at the end of May, since when we have seen a very nice recovery later on, and we came pretty close to that level, but not really spiked below that price. So in my opinion, if we consider the complex ABC x ABC could be really in the cards, and that we are still at the start of a new trading week, meaning that the real direction is yet to be found and discovered. So I normally will not trust Mondays. So in the next few days I would be just observing the price action on gold, and if we see some sell-off here in the next 48 hours, I think that then in the second part of this week there could be some very nice and attractive support right at around 61.8%, which is also very important fib level when it comes to triangle swings and subwaves. Okay, so I think that this support around 3,200 is a very big one, but obviously maybe we'll see just a temporary short-term bounce, because triangle is a 5-wave pattern, ABCDE structure, and we are still just in a subwave C of that potential triangle, and even some alternate counts are also still on the table. Now Oleg says, wow, stocks analysis exit. Yes, once again, free access to stocks to our report, so you can go here after registration and just download it, and you will have free access. Now let's take a look on silver. So silver basically still holding some very important supports here around and above $35. Could be in a wave 4. Triangle is now, in my opinion, the best scenario, but even if you see a retest of slightly lower prices around $35, still fine, because we are basically not seeing a completed 5-wave rise from here. Even if that's already wave 4, still fine, but as long as we are above 33.70, I think that uptrend here is alive, and that silver still could do well after this pause that we are seeing right now. Now let's take a look on some of the cryptos. Here is basically why I'm looking at Coinbase Global as a first market that obviously is not the crypto direct any kind of a coin, is just a stock, but obviously it's a very important for cryptos, as you know. If you look at some cycles and compare it to a Bitcoin, you can see that there were some very nice and similar cycles here in the past, and since we have seen a very nice break higher, I just think that the 5th wave is still ongoing and incomplete. So maybe the Bitcoin will try to attract some buyers and try to catch the upside here, but I'm not really sure if we'll see any kind of a significant real push to the upside. Even if I'm targeting new all-time highs, still be aware that there are some of the altcoins that could do much better. Maybe in Bitcoin, watch out for some resistance around 111, 110,000. You can see here we have yellow colors, meaning it represents there are a lot of stops. So maybe you see this as a magnet and then a pullback. So if you want to look on some opportunities here on Bitcoin, maybe just don't rush at resistance, rather buy and look for some opportunities at the support. But overall, I just like the Ethereum much more. As I said also last time, when we were looking at the wave structure, I said that despite the very strong aggressive decline, basically back then the prices were what, down here, I said that that's still a very strong support around 2000, 2100, because previously we had a very clean 5 waves up. So that's an impulse, that's a direction you want to look and track the markets. Okay, not some kind of a choppy counter-trend movement that has no clear direction. So that's a clear impulse, and whenever you have after this clear impulse this pose, then you should, not you should, but you normally would expect that impulse will again show up in the same direction like the first impulse. So I'm expecting more upside here, and this overlap just confirms, it's just another indication why we think that that's a correction, because in corrections you will see overlaps, not in impulses. And head and shoulders pattern here, I mean, that really looks like a textbook formation, but it's not the head and shoulders until you see the confirmed breakout, meaning not only maybe one daily close above that neckline, because these are cryptocurrencies much more volatile. You can see a sharp move through resistance levels and then market will pull back. So for cryptocurrencies, it's a bit different compared to stocks or any other markets. For confirmed breakouts, I suggest to wait on a 2-3 daily closes outside of the range to successfully call it a breakout. Looking also at Ripple here, also very nice consolidation. It's still ongoing, so nothing new from last time. We're still just basically tracking this ongoing triangle, which could face maybe some resistance in the near term around 2.4, but after all needed ABCD legs will be in place here, I think that's when we will anticipate a final push to the upside close to $4, maybe even $5 if move really goes into extreme. But this will be the final sequence within a higher degree uptrend. Not same, but similar could be even, or even more important based on the Bitcoin cycles that we are also tracking and observing. Okay, traders, that's it for today. Once again, if you're interested in more of our analysis, crypto, forex, now also new section stocks, make sure to go to our website wavetraders.com. You will register, you will see under member plans stocks. It's, as I said, completely free, so make sure to go there, download the report. Please let me know what you think about the report in our comment section here on YouTube. I will be really interested to read your feedback, because I believe that we are still in the developing phase, that it will help us to improve in beta version, obviously. Traders, good luck this week and talk to you soon. Bye.